Facebook. Welcome to Terry's Tips, guys. Get a notebook, get a pen, because today we're going to talk about credit builder accounts. The best credit builder accounts. Not the only, but the best. Listen to my language. So literally, I bind up y'all having bad credit for 3 and 4 and 5 years. Nugget right here. If you use this information to execute, you can literally have a significant credit score increase in 3 to 6 months. Period. Nobody should be working on their credit for 2 and 3 and 4 years. You should be 3 to 6 months, 12 months max. Got it, good, guys. Now I'll do my nugget at the end. So specifically, I'm going to talk about what are credit builder accounts, the different types of credit builder accounts, when to use credit builder accounts, and how to use them. Got it, good, guys. And this is also going to help you do what? Increase your personal credit scores. You can do what? Transition into business credit, build business credit, and qualify for more business credit faster. Okay, so credit builder accounts, what are they? They are literally for your personal credit scores, and they are companies that understand you have either no credit or damaged credit or low credit scores, and they're willing to basically take a risk on you. Guys, you need to understand this. You need to understand the mindset of what you're doing and why you're doing it so you can have success. So they will say, yes, we will give you some credit on your personal credit reports right now to help you increase your personal credit scores. Literally, that's the only reason why you use them. And this is why you should only have a couple of them, okay? Now, the type of credit builder accounts. Guys, write this down. There are only 2 types of accounts on your credit report. You want to learn today. Nugget right here for everybody that is new. I used to work for TransUnion. I'm the only person in this space that used to work for a national credit bureau. I'm board certified, credit score certified. I'm a certified trainer and I have over 20 years of experience. I teach on my videos. Okay, you want to learn today. So listen, there's only 2 types of accounts on your personal credit reports: revolving accounts and installment accounts. And everything you have falls into those 2 categories. You need to understand this because this will help you understand which credit builder accounts you actually need to get better results faster. So revolving are like your credit cards and your lines of credit, and installment accounts are like mortgages, personal loans, car loans, student loans, right? So revolving like a credit card means you have a credit limit, you have a minimum amount and you can use up to the credit limit, and depending on how much you use and how much you pay every single month, the amount due and the amount available is going to change. That's why it's revolving, it's ongoing. And when you make a payment like on a credit card, then it replenishes, right? You can use that amount again. That's revolving credit, okay? Installment credit is like loans. Think about an auto loan as an example. You get $20,000, that is the loan amount. And every single month, $500 is due. And every single month, no matter what, you pay that $500. And then guys, when it's paid off, what happens? It goes with 0 balance and it closes. It does not automatically replenish, okay? So it goes with 0 balance and close. Nugget. For the FICO scoring model, credit mix is one of the categories. And credit mix means that you have a high personal credit score, guys, when you have a mix of both revolving and installment. So you're going to either need to use a revolving credit builder account, an installment credit builder account, or some of you guys are going to need both. You need to understand this because some of you guys have all installment credit and then you get an installment credit builder account and you don't understand why your scores are not increasing. Sometimes you guys have all revolving accounts and then you get a revolving credit builder account and then you don't understand why your scores are not increasing. So you need to understand, number 1, what is currently on your credit report? Do you have revolving? Do you have installment? Do you have both? Number 2, why are your scores low? And number 3, do you need to add a revolving credit builder account, an installment credit builder account, or both? Now, the best ones, literally there's only 2 companies I'm going to talk about today. And that is used to be called Self Lender. That's for your installment credit, and Credit Builder Card. That is for your revolving credit, okay? I'm going to tell you, I'll provide links in the description of this video, depending on when you're watching this, in the pinned comments, but you need to understand how to use them and what kind to get, because there's some strategy here, okay? I help people get 6 and 7 figures, guys. And like I said, this will help you transition into business credit. You do not want to have only authorized accounts on your reports. Nugget. Both of these credit builder accounts, Self, which is your installment credit, and Credit Builder Card, which is your revolving credit, they are primary accounts, meaning they will be in your name. I don't care if you have a 400 or 500 credit score. You can get these accounts today. Nugget. Both accounts, Credit Builder Card and Self, are soft inquiries. Nugget. Both accounts, Credit Builder Card and Self, report to all 3 credit bureaus. Critical, because there are a bunch of other credit builder accounts out here, right? And I say credit builder like this loosely because I don't endorse them because they do hard inquiries. I don't endorse them because they ask for security deposits. I don't endorse them because they report to maybe 1 bureau or only 2. These accounts, again, Credit Builder Card and Self, report to all 3 bureaus, which is what you need, especially Nugget, y'all, for the bigger money. Think about mortgage pre-approvals. Think about cash out refinances. Think about hard money loans. Think about transitioning into business credit. When you guys are going for big money, somebody put in the comments, big money, okay? For big money, they do what? A tri-merge, and they'll look at all 3 bureaus. So it makes absolutely no sense to get a credit builder account that only reports to 1 bureau or 2 bureaus. It makes no sense to get a credit builder account that does a hard inquiry. Y'all stop doing that because it's hurting your actual credit, getting those hard inquiries. You already have damaged credit, okay? So Self, let me start with Self. This is an installment account. So Nugget right here, guys, you're only using credit builder accounts if you need to rebuild credit, meaning you had credit and you have late payments, you have low credit scores, you have damaged credit, you have bankruptcy, you have repo. Guys, day number one of starting to work on your credit, you add your credit builder accounts first. Before you even write one dispute letter, before you even do one personal sweep, guys, I will link my videos on how to increase your scores. I think I did one on not buying trade lines. I did one on credit score hacks. I'll in the comments and in the description, I will link 3 follow-up videos that help you kind of work on your credit, and also my training for you to invest in training to get a better hands-on result. But guys, day number 1 of you saying, I want to work on my credit, add the credit builder accounts. Why? Strategy. While you're working on trying to get things deleted or trying to get things settled, your scores are already going to start to increase because the credit builder accounts are going to be working for you the positive payment history while you're trying to get things removed. So it's going like this: negative things being removed and positive payment history getting built. This means you can see, I've legit seen people get 30, 60, 70, 80 something points with these 2 accounts. Credit Builder Card revolving, Self installment. So for Self, guys, there's going to be 2 options, 12 months and 24 months. Listen to me closely. Always get the 24-month option. Now, why? Because for personal credit scores and FICO scores, one of the categories is length of credit history and new accounts. That means the longer you have accounts, the higher your score. Period. I'm telling y'all what I know. Some of y'all have been working on your credit for like 5 years, and you're going to do this and see an increase that you have never seen before in your entire life because it was finally explained to you, okay? So you get the 24-month option. Now, note right here, guys. Look at some hair in my eye. You know I'm not going to be doing my video, okay? Note right here. Do not comment on my video and say, what about this account? What about that account? What I know about all the other credit builder accounts. This video is about the best. I don't care about any of the other ones. You do not need 20 credit builder accounts. You're going to either need 1 Self lender account and 2 credit builder cards, or you're going to need just Self or just the credit builder cards. That's it. I don't care about no other companies. Got it good. A bunch of them are copycat companies, okay? So you get the Self account, that's installment credit. Do the 24-month option. There will be different amounts that you can actually pay. I think it's like $25 a month or $10 a month. Maybe another option is $150 a month. Get the lowest option. You don't get any more points if you're paying $150 a month on Self as opposed to paying $25. The goal, guys, is having an open, available installment account in your name that you're paying on time. And it is the positive payment history on your open available account that is going to increase your personal credit score drastically, especially if you have late payments, especially if you have collections, especially if you have bankruptcy, especially if you had a repo. Got it, good guys. So, and then what I will do is I'm always about you guys being empowered and educated. So when I put the link in the description and in the comments, guys, when you click on the self account, there's a real quick 1-minute video that explains how it works. So you apply for the account, they add it to your reports. I think it's like, let's say $25 a month comes out of your account every single month, and they report that to the credit bureau as an on-time payment. Again, I've seen people get like 50, 60, 80 something points. It's crazy how well it actually works. Now, nugget, you do not lose that money. Nowhere in my wealth building ministry am I ever about you guys throwing money out the window. So one reason why I endorse self and credit builder card is because for the self account, that $25 a month, they actually put the money in a CD for you. And at the end of 24 months, they unlock the CD and give you the money back. Boom! Sorry about that. It probably was loud in the microphone. Literally, guys, like y'all are out here doing the most and you only need to do one or two things. So it's like, think about it like a secured savings account. You're building a positive payment history. It's a soft inquiry. It's on all 3 bureaus. It's installment credit. And at the end of 24 months, they give you the money back. It's a no-brainer. That's the installment credit. Now for credit builder card, same thing. Soft inquiry, all 3 bureaus. It is a secured credit card. So I think the minimum amount you can put on it is $200 or $300, I believe. Let's say $300, okay? Now, nuggets. Sometimes you guys will say, well, I have $600. Should I get one credit builder card and put $600 on there? No, for credit builder card, again, I will put the link in the description in the comments. I can actually get 2 cards at one time. So if you have $600, guys, I actually recommend you get 2 cards for $300. Now, why? Because again, the goal is open, available, revolving credit, primary in your name that's building positive payment history to counteract charge-offs, late payments, collections, repos, bankruptcy, slow pay, past due, all of the above, guys, right? And so don't worry about the credit limits at this point. Right now, you just need somebody to approve you. So you put in the deposit, say you pay $300 for each card, then they will send you an actual credit card in your name that is primary, and you'll have 2 cards that are equal to $300 each. Now, nugget, how to use these revolving cards. You need to use them. It does no help for you to just get the cards and throw them in the drawer. Guys, you cannot kind of beat the credit scoring system, right? So the goal is to use them and pay them, use them and pay them, use them and pay them, and keep the amount super low. So you're thinking about utilization. For a $300 credit card, I literally would not have more than like $50 on there at any given time. You're using it for gas. You're using it for a gym membership. You're using it to get your nails done. You're using it for the barbershop. You're using it for, Uber Eats or something of that nature, right? So you have the $300 card. You use it. Bill comes in, pay in full. Use it. Bill comes in, pay in full. Listen to me. I'm teaching y'all here today, okay? Use it. Bill comes in, pay in full. Use it. Bill comes in, pay in full. Both cards. If you do this for credit builder card and self lender, you will see a significant credit score increase. And obviously you can't have new negative stuff added. So you're hopefully going to be, working on your other items. But the combination of having the open, available, positive payment history and accounts in your name is going to significantly increase your scores and help you rebuild, reestablish. Now, nugget right here. Guys, don't get all this information and not share it with your sons and daughters, your nephews and nieces, your brothers and sisters, all these things. So if you are somebody with no credit or you're a young person, you can use these accounts to start building up your credit score immediately. Guys, I bought my very first house at the age of 21 when I only made $14 an hour. And that was the beginning. I call that my belief house. That was the beginning of all of this. This is why I'm doing this, because looking good on paper can not only change your life, come on somebody, but change the generations coming behind you. My first house at 21. So if you have an 18-year-old, a 19-year-old, a 20-year-old, 21-year-old, you have children that are in college, guys, give them this information because it can be used for damaged credit, rebuilding credit, or establishing credit. And literally, not on this video, but another video, this is where they can start investing with you. This is where they can do house hacking with you. This is where you can teach them right away financial literacy and financial freedom that you did not have for yourself. Got it good? All right, guys, and for my nuggets, so takeaway, make sure you check the description of my video. Both Credit Builder Card and Self Lender are specific accounts. I will give you the links. There's real quick 30 1-minute videos on each of them that explain how it's used, but I told you guys everything, when to use them, how to use them, the different types of accounts, and you do not need 20 million thousand accounts. You just need the right accounts and using them the right way. And for my nugget, guys, I need you to get out of a consumer mindset. You're driving me crazy. Some of y'all will spend $200 on hair and nails and $300 on shoes and $500 at happy hour or at the mall or on clothes. But then when it's $150 to invest in a training that will change your whole life and free you financially, you're like, why did I gotta spend $150 for training? You just spent $200 last night at happy hour. You just spent $300 during the week on Uber Eats. Guys, if you want to be a true wealth warrior, and this might hurt, but I need to say it, okay? Because we need to stop playing around with this because the information that I share can literally free you and is worth 6 and 7 figures. So stop mindlessly spending your money on things and invest in getting the knowledge and the training so that you never have to rely on paying a credit repair person. I am not in credit repair. I am in education. I am in empowerment. I will not do it for you, but I will teach you everything you need to know so you can do it on your own. And that knowledge is priceless. Got it good? All right, y'all. I hope that was helpful. Let me end with a smile and have an amazing day on purpose.